I'm Craig Jeffery, I'm the Managing Partner of Strategic Treasury. I'm here with Hugh. Hugh, why don't you give yourself a quick introduction so everybody knows who we're talking with?
Sure, I'm Hugh Russell. I'm a Regional Sales Director at Bellin, so I'm one of the sales team. And Bellin is a treasury management system provider. We have a soup to nuts, we like to say, corporate treasury system that does cash management, forecasting, payments, embedded Swift connectivity, everything you'd expect from a treasury system, and a few other features that you don't.
Excellent. So today's topic is called load balanced treasury. This is a term that Bellin has coined, and it has some interesting connotations for how treasury can work and work effectively. So as we move to our first slide, I want to give you some background for why this concept of load balanced treasury, or the democratization of activities around treasury and being able to access information, is so important. We talk about exposures, types of volatility or risks that organizations face. What are some of the key elements that treasury organizations have to manage and monitor to ensure the organization is protected?
You know, when we first start speaking to prospects, the number one thing that they're concerned with is all of the manual work that they're doing right now if they don't have a treasury system in place. So really the amount of work that they're doing to take information and put it all into Excel, then the risk that they have there is that all of these calculations that they've got don't work, or that there's no real auditability of the data in there. The other big piece that we have to get across to them is that they're not just looking to replace Excel at the central treasury level, but they should be looking to replace it across all of their entire group of companies. So getting that concept across is important for us, and giving them an idea of the risk that's not just at the central treasury, but across all of the different entities.
So understanding this risk requires knowing what it is, and sometimes that requires data and information that's not always sitting in one spot, or on the treasurer's desk, or maybe entirely within the treasury domain, and it needs to be gathered and understood and calibrated before you can respond to it. That's excellent. So so there's lots of types of exposure that can drive that. How many countries you're operating in? What's the complexity of the organizations? So as we move on to the next topic, that idea of increased complexity, ongoing globalization always makes it a challenge for organizations. Organizations aren't getting less complex. They're acquiring new ones, they're operating across more borders, there's more payment types, they might have different elements of risk management that they have to protect. So this slide is, identifies some things like number of systems, how many banks you're dealing with, number of currencies, connections, formats. All of those add to complexity that make it harder to get to that element that you're saying. How do I combine and aggregate that information to make the right types of decisions? This is simply one slide that shows responses from a survey. 1 in 11 firms deal in more than 100 companies in some of our survey results. I don't know about you, but I haven't traveled to 100 countries. That's a lot. So a lot of companies are in 60, 80, 100 or more countries, which adds complexity. There's global geopolitical risk in those areas. Each of those elements creates complexity and makes it harder to manage. Do you have any comments on the globalization or complexity element for how treasuries need to think about this, either vis-a-vis load balanced treasury or just in terms of ascertaining what the risk is?
Sure, I think in general the corporate environment is a lot more fluid than it used to be, so people are growing through mergers and acquisitions. So when Central Treasury is looking at how they're managing their processes now, they have to think not just about what they are doing now, but what they might be doing in the future. So, okay, right now they might have 10 banks, but in the future they're acquiring a company that adds 5 more banks, adds another 50 accounts, adds another 10 countries that they're doing business in now. So this has to be something that they keep in the top of their mind when they're looking at how they're managing their processes.
Excellent. So as we continue the thought, here's just a couple elements on the complexity side. This information is available from some of our surveys. How large is your global treasury organization? Very few treasury organizations are staffed with significant numbers. They tend to be very thinly staffed. And even though there has been a general increase in treasury staff on a net level over the past several years, there's no way, I don't know anybody who's saying that's keeping up with the additional responsibilities that have occurred. So staffing is not enough to handle the additional complexity, additional expectations on Treasury. And this is where it brings us to some of the concepts around a load balance treasury. So as we look on that, here's an image that we have, and maybe you might want to explain in different terms, but how does a traditional treasury work, and what are the challenges there versus a load balance treasury? How will that look? How will that be different? How is work shared? What does that look like?
Sure. So the idea behind load balance treasury is really that Central Treasury Department is not the only people in the organization that play a role in Treasury. And that's really the concept that we're trying to get across, is that all of the various different legal entities, they've got somebody in the corporate finance department that's playing some small part in the Treasury piece. And what we want to do is we want to spread the idea that these entities should be collaborating together with the Central Treasury, so the Central Treasury has a better quality data, and they get the data in time and all in a centralized place where they can do better reporting. So if you're looking at this graph, basically what you're seeing here is that typically the Treasury work is all is centralized, and then they might have some regional Treasury centers, but outside of that, all of the various different entities don't really participate in a traditional Treasury role. With the concept of load balance Treasury, then you have active participation in the Treasury role from your legal entities, and that increases your visibility, increases your ability to do risk management, fraud prevention, global consolidated forecasting. There's so many different places where load balance Treasury can play a key role in the processes that you're doing on a day-to-day basis.
So is this, I would think a possible negative claim against that would be you're just pushing your work off to other people to do it. I know that's not what you're getting at. So how would you describe that in a little more detail?
Well, not to go into too much of a sales role, but basically in order for this whole concept to work, you need to have a system in place where the legal entities can participate. Because the legal entities, they're already doing cash management, they're doing their balance reporting, they're making their payments. The only thing that we're asking them to do is to change the way that they do it in the system that they use to do it in. So that way, if they have a centralized system where they're doing their cash management, they're forecasting their payments, tracking their debt, their investments, etc., then all of the data rolls up to the Central Treasury because they have access to that system. And that's really the only change. And basically the Central Treasury is seen not as a department that's got reporting requirements of all of the legal entities. It's seen as a department that's a service provider to the legal entities. They're providing a tool that can be used by the entities.
Would it be fair to say that the organization may be more or less decentralized, but the information would be centralized, the system might be standardized, the processes may be consistent, but you could be doing those remotely, sharing that data in a separate manner, but you don't have to be, everything has to be controlled by a Central Treasury. They're doing their pieces, they're just sharing information, or how would you describe that?
Yeah, I think that's a really good summary. I think that it's a hybrid approach. We have a ton of customers who are very decentralized. Their entities operate autonomously, so they're not really involved too much with the day-to-day operations of each of those entities. So they have a lot of difficulty getting visibility into what's going on, and a system like this is the way to do it. So they can stay decentralized as far as how they operate, but the data is then centralized.
Excellent. Yeah, that brings back that famous quote that is not really attributed to anybody, but optimizing part of the process sub-optimizes the whole. This idea of putting the data together, having consistent processes, whether it's done remotely or centrally, gives you some of that efficiency, shares the work, it puts it in the hands and the decisions in the hands of the right people. So as we look farther and continue this dialogue, this idea of a network is part of load balance treasury, whether it's a system, access to data, however you describe it, we put it as a network. Maybe you could describe where you see the value of a network. How would you relate that to anybody, any corporate person saying, this is why load balance treasury works, why there's a value in this network of information, of consistency of processes?
Sure, there's a concept called the network effect, and in networking, also especially in the concept of phones, is a very good example of the network effect. I mean, a phone is really only as useful to you if other people have phones. I mean, if I'm the only person who has a phone, then it's really a useless device. So if two people have phones, then it's a little bit more useful to me. There's at least one person I can phone. And if 500 people have phones, and et cetera, et cetera. So the value of the phone itself is increased by the number of people who have phones. And that's exactly how we see the concept of load balanced treasury play out. So the value of that system is increased to all of the entities, because the more entities that participate, the easier it is to communicate back and forth amongst the entities that normally in large organizations, these people who are working at these entities, they may have no other way of communicating other than via email. So this is a structured way for them to communicate in their corporate finance role.
Maybe we've taken the phone analogy even further versus, if you're not going to use a phone to communicate directly, so there's no loss of information, if it's passed by word of mouth, that telephone game, you pass a phrase on, by the end it's completely different.
Yeah.
That happens with data in organizations too, right? You don't care about the data, you pass it on in an email, someone keys it in, they make mistakes, or they don't care about it, there's no feedback loop, they end up with some different challenges. What are some of the benefits you have? I think you've listed some here on the screen, but some of the benefits are reduced errors because it's shared, it's viewed. Load balanced treasury is also, kind of this democratization and clear visibility into that. What are some of the other elements that you have here, and why does that make a difference?
Yeah, I think that definitely, at the legal entity level, they're going to put a lot more focus on what they're doing for cash management, what they're doing for forecasting at their level. So if they are doing their own cash management, their own forecasting in a separate system, and then they have some reporting requirements for the central treasury, you can bet that that's going to be sort of at the back of the mind and not front of the mind. So if you can give them a system that's sort of front of the mind, part of their daily work, then that's increasing all of the accuracy, and then it increases all of the auditability of where this information is coming from. You know where it is, you see who entered it. It's not just some data that came in on an email and you typed it into your system. So it's a completely different approach.
Yeah, and there's a few more there. That skin in the game. You were basically talking. They're committed to it. They have value, a stake in it. That intentional access. They've got access to it. And so that idea of we only have 3 phones in the company. We can't get to the other people. So now we use email or we send things by snail mail. Slows down the process, impedes it. So any final thoughts or summaries on the value of load balanced treasury, or what might be a takeaway that someone has on load balanced treasury?
Yeah, sure. I think that the most difficult thing for me as a sales guy for Bellin is convincing our prospects that they should be thinking less about fixing the problems that they have today, and think about, okay, when those problems are gone, what are the things that you're going to want to do in Treasury? And think about more a long-term view of what the Treasury Department's capable of. Because right now they think, okay, well, I can only do certain tasks during the day, and they have a certain amount of time to do it. If you take away all those tasks, there's a ton of functionality that the Treasury Department can provide to an organization that's just untapped without a system in place.
I like that. One of the things we talk about is, Treasury as a vendor or Treasury as a partner. The mindset of Treasury as a vendor, they hide out on their own. They go and they service a need here and there. It keeps them insular or isolated and doesn't solve all the needs, and it reduces the value. It's a lot less strategic. Yes, you need capital for that. Treasury as a partner is like, how do I make the organization more efficient, more effective? How do we meet all those needs? And that sort of ties into this load balanced treasury. It's more of a communication, not just information, but also discussions. But that would be another hot seat to cover all of that, and I think that's excellent. So I want to thank Hugh for joining us to talk about load balanced treasury. So thank you, Hugh.